Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. Back in January this year, I compiled and published my annual video commentary on LME 3-month copper. Please look at the YouTube index to see it if you haven't already. In this video, I looked back and found a very relevant technical pattern for the action seen since mid-December last year. That key piece of evidence is recreated here on this daily chart in bright red. And that is the 2009-2016 bullish shift pitchfork. And the key specific piece, buried amongst some other colourful ones, is the bright red upper tine, currently at 13,472, that slashes across the middle of my daily chart. This bright red upper tine had previously mainly capped prices until early May this year. It was a key piece of overhead resistance, but it was now again being breached and now possibly broken, this time with force. I started 8 weeks ago looking for the next pattern, and this came down to these possibilities. The first, a major and still working pattern, is the purple November 25 to March 26 bullish shift pitchfork, with prices in between the overhead purple middle tine, which is currently at 14,629, and a purple lower time below, currently at 12,970. The second possibility was the late December 2025 to early May 2026 reverse head and shoulder pattern. A pattern usually considered bullish, though there is a bearish continuation variety. I have stated openly over many weeks that I have not been happy about this pattern, but I did say on this pattern, I quote, lay out what I consider potentials right now, not targets as yet, but potentials for the move higher. Thus, the primary potential will be up in the 14,747 area, thus from above the high of the market, and a secondary harder to reach potential will be up in the 15,271 area, close to the top of my daily chart. I have doubts about this pattern. I think it is weakest by a country mile of the ideas mentioned. End of quote. But now I will not develop this idea any further, as other more effective and interesting patterns have subsequently appeared since that time. A third, newer pattern has developed. It is a split. It's split into two ideas. The first part is a dark blue early May to late June descending triangle pattern, which the market exited properly on the upside 2 weeks ago. Or it can be a longer term, end of January to late May, possible descending triangle, utilizing the same base but with a higher bright pink downtrend, currently at 13,908. I'm still not wholly convinced on this latter pattern, but I will still mention it because last week we broke up through the bright pink downtrend. On these two ideas, I had 3 weeks ago laid out topside targets for the dark blue descending triangle of a primary target X3 at 14,210 and a secondary hard to reach target X4 at 14,415. Primary target X3 at 14,210 was reached last week. For that second idea of the larger 2026 descending triangle for a bright pink downtrend, upper downtrend, I will now lay out a primary target X5 at 14,220. That target already reached, and a secondary harder to reach target X6 up at 14,570, just above the top of the market. I'd now like to draw your attention to a new pattern I've drawn, a late March to early May bright green bullish shift pitchfork, with the market in between the bright green middle tine above, currently at 14,591, and the bright green lower tine below, currently at 13,689. Those bright green, the bright green middle tine crosses the purple middle tine at about the 19th of August, give or take a day. Though they are not related pitchforks, I would still watch out for some volatility around then. This all still brings me to the same point I've made 5 weeks ago when I said, and I quote, "All this leads me to suspect that with all these patterns we are coming to some sort of a cusp, maybe in the next month or two, so watch out, as we could have an explosive rendition after the possible cusp." End of quote. This continues to be the unsettling and interesting point of view at the same time indeed. LME 3-month aluminium. The market here edged out, then below, and now clearly above and back within what was originally a bright green April/May 2025 to date bull channel that morphed into an April/May to date very large bright green expanding wedge pattern, currently 32.59 to 38.64. However, the edging out only resulted in breaches, extensive breaches I grant you, but just breaches, not breaks. This very large rising expanding wedge pattern with the market not really letting go of the bright green lower trend line. The drop down in early June through to early July stabilized at the 50% Fibonacci line of the March to September 22 move at 30.76, and from which we saw a slow rise, almost a bull channel, below the newly drawn dark blue lower tie, currently at 31.48, of the big April 2015 to July 2026 bullish Andrews pitchfork. A pitchfork I hope will shoulder the bullish incentive in this market. And a recently drawn bright red upper trend line, now breached and on the verge of being broken, currently at 32.87. Prices this week have pushed up over the declining green short medium moving average, which is currently at 32.96, and are challenging a congestion at 33.80. This breakup of the out of the bull channel has laid out a primary target X at 34.21, which is just above the next resistance, the mauve medium moving average, currently at 34.01. That's the next resistance above the congestion I've already mentioned, and a secondary harder to reach target X1 up at 34.58, which is a little further above the mauve medium moving average. I would like to once again point out a major long-term pattern here of the purple middle line further above, currently at 34.98, and that's of the very large November 2015 to April 2020 bullish Andrews pitchfork. This bullish pattern is still in operation, as the upper tine is right now still up off the top of my daily chart, and the purple lower tine, currently at 26.75, is down towards the lower end of my daily chart. This is a pattern to pay attention to on a longer term basis. LME 3-month lead. The market's recent big moves lower has led to 4 patterns forming. The first was the monthly key reversal down for June, with some follow through lower throughout July, but it became more of a stabilizing market in July than a bearish one. The second pattern was the early May to late June head and shoulders top, a bright red neckline, currently at 18.90. 7 weeks ago I said about this pattern, I quote, "We're in the final stages of completing this pattern, so I cannot give targets below, assuming of course it is a head and shoulders top. I can give an idea of the size of the move should it happen between my commentaries. Hence, for a confirmed break below the bright red neckline, with a high primary move of minus $50 under the neckline break, and a secondary hard to achieve move of minus $97 under the neckline break." End of quote. Well, we had a break lower below the neckline 6 weeks ago, and I added 5 weeks ago, and I quote, "Since then we have had a break lower, and hence I gave a primary target 1881, a target we reached today, and a secondary hard to reach target X1 down at 1834, end of quote. In mid-July, we moved down relatively close to target X1 before backing up again. I had been watching to see what will happen next, whether we head back down or break higher, back upwards, back over the bright red neckline. It seems we are breaching higher, and I will likely retire target X by the next commentary as a result. Indeed, we seem today to be remaining within a wide stabilization band between approximately 1850 up to about 1900, maybe 1920. Then there is another newer pattern drawn for that 4 weeks ago of a dark blue January to June bearish Andrews pitchfork, which might show some insight into the bearish angle of attack here. Over late June and early July, prices have bounced up off the declining dark blue middle tine below, currently at 1806, twice, showing support, if a declining support, each day, and now starting to approach the dark blue upper tine of this pattern, currently at 1944. This is one to watch, though I am of course happy in a heartbeat to finesse it into a shallower bearish shift pitch fork if the market demands it. Now, this recent stabilisation over July, what I thought might originally be a double bottom, has now morphed into a possible reverse head and shoulders pattern. We haven't completed the patterns yet, so I'm not able to give targets, but we are approaching the bright green neckline currently at 1919, which is crossing the green declining short medium moving average today. This could become a very interesting pattern if it plays out and does not morph into something else. I'll watch that bright green neckline with great interest. This brings me to my final point. It's a point I've been making here since the start of 2025 and will continue to do so going forward. At the end of December 2024, we saw the market had created a very large and rare annual key reversal down in LME 3-month lead. Since then, well, we haven't really done that much, especially compared to some of the other metals. Indeed, prices are only about $45 or so lower today than they were at the end of 24. This is not an endorsement of the annual key reversal down, but neither is a repudiation of it. Hence, I still say, even now, with prices where they are, that one should still look at all things going forward, in this year and beyond, here in this metal, in the shadow of this longer term bearish pattern. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.